So your stocks went down today, and you're wondering why your stocks are hurting a little bit. Today wasn't the end of the world, but you did see a little bit of a dip, at least if you were invested in the broad indexes. I'm going to explain to you what went on in the stock market this morning and what to look out for and how things are going. We're going to get started. Buckle up your seatbelt, hit the thumbs up button. We're starting on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I am your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black economics and Black wealth every single day. We have already closed the racial wealth gap, so there is no wealth gap in this space because you are investing like millionaires. You're making all the right money moves, and your children are going to be the richest SOBs on the entire planet. I guarantee it. Why? Well, because you're planting seeds and you're making the right move, and you're also living by what I call the B1 philosophy. B1 means we are Black first. That means we put our community at the top of our priority list. We solve our own problems here. We're not waiting on Superman. We don't believe that white people are better. Also, B1 means that our children are going to be world leaders in economics, wealth building, real estate, and asset ownership in the next 50 years. That's called Project 2070. And also B1 means we understand we must be one in order to be successful. That means you should invest as much in your relationship management ability as you put into learning about investing and wealth building, etc. Because relationships and family and connection is the key to wealth. When people come together as groups, you tend to get wealthier. When you try to do it by yourself, you end up scrambling. So if you agree with this philosophy, put a hashtag B in the number one in the chat, hashtag B1. Use it on Twitter, Instagram, Facebook, everywhere else so the B1 people can have conversations. Hello, Warner and Anthony and Sergio and Terry Cobb and Money Up Records LLC and Marsha Wright. Good to see you. All right, so let's get started here. Let me break down what's going on. Give me a yes or no if you can still hear me. I'm on a different screen. Let me know if you can hear me. Also, give me a yes or no. Let me know if you made money today. If you made money, say made money. If you didn't make money, say lost money. I want to know how everybody's doing. So here's what's going on. This morning, you saw a little bit of a dip in the stock market. According to CNBC, Chinese growth is slowing more than expected. China's retail sales increased by 8.5% in July year over year, which is below the 11.5% forecast from the poll at Reuters. Online sales gained just 4.4% for the month on the manufacturing sector in China. Industrial production increased by 6.4% below the 7.8% consensus estimate. So behind the numbers, there's typically a story. So let's figure out what the story is. So the country's National Bureau of Statistics noted an impact from the virus. I'm not going to say the C word because YouTube gets funny about that. The virus and domestic flooding. Oh, there's flooding in the country. Okay, saying the country's economic recovery is still unstable and uneven. Quote, Delta-driven slowdowns grip China, says Jim Cramer in a tweet. Not sure of impact here yet. Oil prices dropped after the release of Chinese economic data. Higher oil prices tends to mean a stronger economic activity. Lower oil prices means things are kind of headed south. Not always true, but it's typically true in this case. Occidental, ExxonMobil, etc., all dropped a little bit. So if you're into the energy trade, this might be a time to pick up some ExxonMobil if that's of interest to you. The yield on the 10-year, another thing that they pay attention to, that also dropped to 1.238%. Now, bond yields tend to fall as bond prices rise. Also, lower bond yields is another sign of slowed economic activity. So the general trend here is that things are sucking a little bit in China, and people think that means things might suck here in the United States pretty soon. They kind of see China as a little bit of a canary in the mine, and they wonder if that's going to translate to the United States and sink our ship too. And this Delta variant is really throwing a monkey wrench in everything, and it's really creating a lot of uncertainty. Uncertainty is bad for stock prices. Even if everything remains the same, just not being sure of what's going to happen and having the knowns, the unknowns, and the unknown unknowns is something that's making people very nervous. Tech shares are under pressure, which tends to happen in situations like this. Apple, Alphabet, Facebook, and Google all dropped more than 1%. Retail stocks inched higher ahead of quarterly earnings reports from major companies. Walmart gained 1% ahead of its quarterly report slated for Tuesday. Home Depot and Lowe's both edged higher. So they're going to report this week. That's going to be interesting. Now, Tesla. How many of you invested in Tesla? Give me a yes if you invested in Tesla. Their stock dropped after the National Highway Traffic Safety Administration announced a formal probe into the electric vehicle maker's autopilot partially automated driving system. Shares of Moderna, which are up 240%, lost more than 6%. Now that's kind of interesting. I don't know what's going on with that. I didn't know Moderna actually, from what I saw in a video somewhere, is that Moderna actually stands for Mode RNA, MODERNA, which is based on this RNA technology apparently, where they do something to your DNA, or just, they inject it with RNA. Or sounded kind of creepy, but hey, I'm not judging. I'm not going to even talk about that government shot. I'll let y'all make your own decision on that. The major stock indexes for much of the last month have ground to new records. So right now you have high corporate earnings and high valuations that's leading a lot of people to be very nervous and to feel like we're going to have a pullback. I'm kind of in the crowd that believes there's going to be a pullback. Also, there's growing support within the Fed to announce a tapering of bond purchases in September, which is going to be sooner than was expected. When the Fed starts to back out, it's going to be a little bit like when the U.S. government backed out of Afghanistan. I don't know if anybody, give me a yes or no if you've been following what's going on in Afghanistan, where you literally have the fall of Saigon 2.0 happening right now in Afghanistan. Give me a yes or no if you've been following that. Well, the Fed is kind of like the U.S. government was in Afghanistan, the same way the U.S. government propped up that false government in Afghanistan for 20 years and wasted billions of dollars, by the way. Billions that could have been spent maybe paying reparations, maybe doing an urban renewal plan, maybe on infrastructure, but apparently they spent billions of dollars building up a fake army in Afghanistan. Well, anyway, I'm not going to get into the politics of it all, but the same way the United States government is pulling out of Afghanistan and is leading to basically the fall of Saigon, like literally all those troops they spent billions of dollars in training are just giving up. They're selling their weapons to the Taliban and walking away. They're like, man, F this stuff. I don't even want this job anyway. I'm going to go do what's best for me and my family. Well, the same thing is true with the Fed. The Fed is doing a similar thing in the sense that they are propping up asset prices right now. They are dumping $120 billion a month into the market, creating additional liquidity, which was entirely necessary during the pandemic. Some think it's not necessary now. So some believe that instead of withdrawing their economic troops, you remember I told you dollar bills are like little soldiers. So instead of withdrawing their troops in January, like people expect, they may withdraw in September. If they withdraw in September, then you might have the fall of Saigon. Do you get what I'm saying? Give me a guess if you follow that analogy. Y'all know me. I'm the analogy king, I think. That's what my wife calls me. And so